So hey guys, welcome back to EM and SMC Trader. This is a weekly recap video. In this video today we will be explaining and backtesting our previous week trades, analysis, A to Z, everything. We will be explaining and recapping everything. This is kind of a revision, okay? This is kind of revision, and in your whole trading career, to be a consistent profitable trader, you need this, okay? You should practice this habit must be on you. So as today is the weekend, okay, today is Saturday, so we don't have nothing to do, just normally sitting in front of the monitor, but the candles are not moving, so it's totally a boring, and normally the weekends are boring for me, okay? So that's why I simply backtest. Also I predict the next week, okay, that how price can react. So in this video I will just simply recap the previous week. So this video will be a bit longer, okay? So hope you guys will be watching this video and enjoying it. This will be a totally educational video. So if you want to learn something, then you can watch this video. I know my accent is not that much, cause as I am it's typically first time for me talking in front of YouTube, so that's why it's a little bit harder, but I will try my best to give you something, okay? So as here we can see, I am on my weekly chart. I will just simply recap this candle, okay? But why this candle is bearish, why this candle is black, let me explain this, okay? So over here, this is the weekly candles, okay? These all are the weekly candles. So over here we can see these are the buy side liquidity, okay? This is the buy side liquidity. Market has taken all the buy side liquidity and the body has been closed above this, means the buy side liquidity has been taken. Then we have to mark this, okay? This is the week 50%. So over here we can see market simply reacted from the week 50%. No body has been closed above the week, okay, above the week 50%. So this is a confirmation for us that this market can move for the sell side, okay? Cause there is no reason that market will be taking the all-time high by keeping those extreme sell side liquidities, okay? So here we can see these are the extreme sell side liquidities, so market shouldn't do this. And over here we can see there is a inversion fair value gap, okay? This is an inversion fair value gap. So over here from this market has taken all the sell side liquidities and reacted from this inversion fair value gap by this week, and this week price action was too smooth, okay? Let me explain. So let's go to the daily chart. So on the daily chart we can see, let me delete this, okay? So on the daily chart we can see this, this is a perfect support zone, okay? This is the perfect, or this is the accurate support zone for the retail traders, those who we are the ICT traders, okay, the smart money SMC traders, but those who are retail traders, the support resistance trader, they can see this is a strong support zone, okay? Then when the market is coming here, they are taking buy, and the market is this is the market is simply building the liquidity over here. So see over here also, when the market reached here, okay, when the market reached here, market was reacting. Over here again, come over here, and market was reacting, come here and reacting. This is the resistance and this is the support, okay? So retail traders would think like that, when the market will come here, I will take sell, okay, until this. Then when the market will come over here, they will take buy sorry, they will take buy. So this is the retail concept, but as we are ICT traders, we always look for the liquidity. So over here we can see the market have the extreme sell side liquidity over here. So when over here we can see this is the order block. Okay, see, this is the order block. How beautifully market simply reacted from this order block. See, this is the 50% of this order block, this level. Let me see, this is the this level, this like this level. Over here you can see this is the 50% of this level, means this is the mean threshold of the order block. No body has been closed above the mean threshold, so this order block send the price. Okay, and over here market taken all the buy side liquidities. No more buy side liquidities were left except this all-time high. So over here market, okay, this is not our topic, by the way. I just talked that why I was just explaining why the market fall for this sell side liquidity, as on this week the market was like, what to say, it was completely a bearish market. So let's go to now the 15-minute chart. So it's from, okay, it's from 23rd. Okay, from here let me mark with a line. So I will simply explaining until this. Okay, I will simply explain until this. So this is our weekly recap for today, and from the higher time PD arrays I showed everything. From the weekly and daily chart I showed everything. Those were like the higher time PD array. So over here we can see this is the weekly range. Okay, this is the weekly range, and now I will explain this range. So first of all let's go through the 15-minute chart. So wait, so over here we can see market simply opened from here. Okay, then taken all the buy side liquidities over here. See, taken all the buy side liquidities over here, build the buy side liquidity. Also there is a higher time frame PD array. It's I think it's a 1 hour fair value gap. So market simply traded a fair value gap. Also market traded the, there is a, wait, let me show, there is a new week opening gap. Okay, so this is the new week opening gap. Market simply traded the new week opening gap and that specific higher time frame PD array gap, and market simply fall and keep this buy side liquidity. I will explain you guys why market kept those buy side liquidity. Okay, I will explain it at end of the video why market kept those buy side liquidity. So over here market simply took those buy side liquidity and fall. This was the 930 run. Okay, from here this is the 930 run. So market simply closed below the, this is what, this is the new week opening gap also. So market simply closed below the new week opening gap, and this is the gap. Okay, then over here market simply traded the new week opening gap. See, market traded this gap. Also by a tick market traded the new week opening gap, then market simply fall. So from here market simply fall. Let me explain the whole price by 15 minutes first of all, then I will go for 1 minute chart and I will explain the trades. So over here I can see this is the last fair value gap. Okay, no more fair value gaps are there on this run. Okay, on this run no more fair value gaps are there. Okay, so this is the only fair value gap, and over here we can see market was simply respecting this fair value gap. Also the, what to say, this is also a new week opening gap. I think, yes, this is also a new week opening gap. Market was simply reacting from this new week opening gap and also respecting this gap and builded this buy side liquidity. Can you see how strong this buy side liquidity is? So market didn't take those buy side liquidity, market simply took this buy side liquidity, like didn't take this buy side liquidity. By the 1 minute chart market has taken this buy side liquidity, but by the 15 minute chart this is a kind of shallow run. Okay, but these are buy side liquidity taken, by the way. So from here market simply traded the this is a new day opening gap, maybe. Yeah, this is a new day opening gap. This gap is the new day opening gap. Market simply fall again, come here, made this buy side liquidity much more stronger, taken all these buy side liquidity. Okay, taken all these buy side liquidities. These are buy side liquidities, also they are the buy side liquidities. So market simply taken all the buy side liquidities and made these buy side liquidity stronger. And never, like, every time I say that, okay, I will be saying this important line at the end of the video. Okay, these are like something gem. Okay, so I will be talking something about the liquidity, the most important parts. So I will be talking about the liquidities at the end of the video. Okay, the important parts will be on the end of the video, by the way. So this is the last fair value gap. Market simply broke this fair value gap. Okay, over here market simply broke this fair value gap. This is the 930 open. Okay, this candle was the 930 open. Market simply came here and see, this is the last fair value gap when market simply traded a higher time frame PD array and fall. These 15 minutes last fair value gap have the power to reverse the price, and take this buy side liquidity. Okay, so when market came here I was bullish. Because I can see market didn't take all those buy side liquidities. Okay, but when the 15 minutes candle has closed below this 15 minutes last fair value gap, I was confirmed that this market will going for some kind of sell side liquidities. Okay, so over here when I like this, okay, I'll be talking this on the 1 minute chart. Then over here market simply traded a higher time frame PDRM. There is some kind of higher time frame PDRS over here. There is a 15 minutes and hourly fair value gap. Market simply traded that and give a higher little run. Okay, then market simply created a 15 minutes last fair value gap, bullish gap. Okay, so on this huge run, this is a downtrend. I won't look for buy because this is a downtrend, but I can look for buy when the market will create a 15 minutes bearish bullish fair value gap. I will wait for a 15 minutes bullish fair value gap, and over here I can see market has made the 15 minutes bullish fair value gap. So now I can be confirmed that the market can go a little bit higher, but on the daily and weekly chart we know that the market is falling. But in a like short run we know that, like, what to say, every time we know the market don't fall like this. The market fall like this much, then go a little bit higher, again fall, go a little bit higher, again fall, go a little bit higher, again fall. So we can consider this run. Okay, this run, we can consider this higher run as this run. Okay, like these highs, then these highs. Okay, so wait, let me delete this. So over here we can see market simply traded this last fair value gap and boom. So after that market simply created the 15 minutes buy side liquidity. Market taken all the sell side liquidities from here. Market was trading a 1 minute last fair value gap and reversing and making the sell side liquidity much more stronger. Over here this is extreme sell side liquidity. Okay, after that market simply took all the sell side liquidity, then move for that buy side liquidity, because this is a short term, this is a bullish market. Okay, so in short term this is a bullish market. I will be looking for buy until this last fair value gap is broken completely by a 15 minutes candle. Okay, over here we can see the candles didn't broke, the body didn't close below the last fair value gap. Okay, but when over here we can see the candle body has been closed below this and the market went lower. Okay, so let's come over here. So as this is a bullish market, market won't take the buy side liquidity at first. Okay, this is a common rule, we every ICT traders know. So market simply taken all the sell side liquidities, trade a higher time frame PD array, like traded this 15 minutes fair value gap. Okay, traded this 15 minutes fair value gap, sorry. traded this 15 minutes fair value gap, also traded like nobody was closed below the 15 like 50% of this last fair value gap. Okay, this is the last fair value gap of this run. Okay, don't think that run. I'm not talking about the whole run, I'm talking about this specific run. So market simply traded this what is this? This is a new day opening gap. Market also respected, the price has been respected from this new day opening gap, and boom, for this buy side liquidity. After that there is a inversion fair value gap over here, we can see, and we can consider this as an order block. Let me show this as an order block, but market didn't tap to the order block, market didn't trade the order block, market simply traded the inversion fair value gap, also traded and respected from the 50% of this inversion fair value gap. And over here we can see the 50, like this is not the gap, like this is the last fair value gap of this whole bearish run. Okay, and market simply broke this level also. But as in the long term, market, like every time when the market will go or market will move, like think that market have some job. Okay, so it's like AMD. Okay, accumulation, this is the manipulation, taking all the liquidities, then distribution. Okay, so in long term the market is bearish. Okay, we have to keep it on our mind. So in the long term the market is bearish. So over here we can see market simply respected again the last fair value gap, taken all this liquidity, build some liquidity over here, also in the 1 minute chart build some liquidity over here. Okay, these are the liquidities. Market taken all these liquidities, these liquidities, and went higher. Okay, then market simply traded this fair value gap. This is our fair value gap. Okay, and if we mark the fair value gap, let me show you guys. Okay, as this candle, okay, as this candle had traded some higher time frame PDRA, so this is our order block. Okay, this is the highest up close body close candle. See how beautifully market reacted from the 50% of this order block. Okay, so market simply reacted from the order block, taken all the buy side liquidities, over here all the sell side liquidities. Market don't have any other jobs. Then over here market made the buy side liquidity, but in the 1 minute chart it has taken all the buy side liquidities. Okay, then market broke all these new day and new week opening gaps, all this. Then we are confirmed that the market is bearish. Also market broke the last fair value gap. Okay, the candle has been closed below the last fair value gap. So now we can think that the market is completely bearish, and there were the extreme sell side liquidity. I marked it, but when the market take all the sell side liquidity, market took all the sell side liquidity, I simply delete that. By the way, you guys, like those who trade on the NQ, they know that market has taken the extreme, like it was nearly about 3 to 4 months liquidity market has made, and yesterday the market has taken all the sell side liquidities. Okay, so over here market simply reacted from a higher time frame PDRA. Okay, there is some kind of higher time frame PDRA. So sorry, this is not a higher time frame PDRA, this is the support zone I like marked on the daily candle, daily chart. Okay, by the way, so over here market simply, over here we can say market simply reacted from this entry fair value gap. Okay, this is the entry fair value gap, this is the last fair value gap. Market simply reacted from the entry fair value gap, built some sell side liquidities, and taken all the buy side liquidity. Okay, you guys can see market has these are the sell side liquidities. Okay, and market has taken all the, like there is no buy side liquidities left, but market made some liquidities and take all the sell side liquidities, also made some liquidity over here, buy side liquidities, taken all the buy side liquidities, then fall. Then over here market has, by this run market has taken, this was nearly the PM session in, yes, this is the PM run. Okay, so market taken all the sell side liquidities. This was probably this is Thursday, and on Friday the market simply accumulated, and Friday's price action was literally the it's way better price action. Okay, I was really feeling good to trade on Friday. As well, I uploaded a video on my YouTube channel. Like, I uploaded the video, it's nearly almost half an hour, like it's 1 hour. I uploaded the video and started recording this video, as I don't have nothing to do today, like as this is the weekend. So I think that let me make a video. It would be like a recap for me, also for you. This would be beneficial for us, both of us. So over here we can see market build the buy side liquidity. Okay, buy side liquidity, market build the sell side liquidities. Market taken all the sell side liquidities by the 9:30 run. I was watching the price. Market simply taken all the sell side liquidities, and like this, in normal language, let me explain. This is the accumulation, this is the manipulation, this were the distribution. Okay, this is the distribution. Again, this is the accumulation, this is the manipulation. Okay, this is the manipulation, taken some sell side, like there were, yeah, yes, there were the sell side liquidities. So market made the buy side liquidities over here, then made, yeah, taken the sell side liquidities by the manipulation, and then on the PM session the distribution. It was really a awesome price action on Friday. And on Friday I didn't trade on the AM session. I took one entry on the PM session, and that was nearly about 128 handles, means 500 plus ticks. So I uploaded the video. Sorry guys, I uploaded the video, you can check it out. So over here we can see market made liquidities, manipulation, then distribution, accumulation, manipulation, distribution. Okay, the AMD. Then over here I took a entry on the PM session. Okay, on the Friday. Let me explain it from the 15-minute chart. Over here, these were the sell side liquidities. Okay, let me okay, these were the sell side liquidities. Okay, let me change the color to make it red. Sorry. So these were the sell side liquidities. Market made those buy side liquidities, kept those buy side liquidities, taken all the sell side liquidities. When the 15-minute candle was closed below this, I was thinking to take a sell, but I didn't took my sell because like I couldn't find any sort of liquidities, and everyone knows that where the liquidities are, the market will go for, like, if there is a liquidity on the buy side, market won't go for the sell side. Okay, there is, market always moves for, like, always run for some jobs. Okay, when the market have some works undone, sorry guys, sorry, so when the market have some works undone, like it's not finished yet, then market went for that. So market always go, like, it's literally like magnets. Okay, liquidities are like magnets. Okay, so market always moves for liquidity, and this was against the liquidity, and this was completely a manipulation. So when this 15-minute candle, like this was the last fair value gap, when the 15-minute candle was closed, the body was closed below this last 15 minutes fair value gap, I was planning for taking a sell, but I didn't get any sort of sell side liquidities, as today the market has taken all the sell side liquidities. Okay, then I was waiting and saw that this candle was closed above. So this was below, there is a new day opening gap, this was below the new day opening gap, but I didn't care, because as there is no liquidity, also the market has closed above the 15 minutes fair value gap again. So this was a fake breakout. Then, like, it was not a quick reaction, but we can consider this as a fake breakout, as there is no sell side liquidities. So this was, like, the market was a little bit late, as like Friday is the last day of the weekend. Okay, like of the week, sorry, of the week. So there is some kind of, like, you won't get 100% accurate price action, okay, on the market, on this market, by the way. Then over here we can see the 15 minutes candle has closed above. I took my entry from here. I recorded the whole run video, this run from here to here. I recorded my whole video and explained it. You can watch the video, by the way. I talked a lot. Okay, now let's go to the 1 minute chart. I think this will be a huge video, by the way. Yeah, this is a huge video. Now I will be explaining the 1 minute chart. Lol. By the way, it's taking a little bit time to load. I really don't know why. Okay, now we are on the 1 minute chart. So over here, this is the first presented fair value gap. Okay, this is the first presented fair value gap after the 9:30 run. I didn't trade over here. Then over here I also didn't trade. Oh, I took a entry over here. Okay, I took a buy entry over here. Okay, I took a buy entry over here. Why I took this buy entry, let me explain. After this huge fall, there were some kind of high time frame PDRA, maybe I deleted. So let me explain. So when market taken all the sell side liquidities and market simply reacted from the weak 50%, okay, there is the weak 50%. So over here market simply reacted from this weak 50%, and I won't be bearish as this week was not traded, okay. But when I was in the live market, okay, this is Monday, yes, when I was in the live market, I was simply saying that if I want to see the 1 minute candle body will be closed below the weak 50%, and there is no fake breakout on the case, in the case of weak 50%, okay. If one body is closed below the weak 50%, it means the market will go bearish, okay. The market will go bull or bear, I don't care, but there is no fake breakout for the weak 50%, by the way. Then when market simply go higher, then traded this last fair value gap, a little bit low run, then I can see there were some buy side liquidity. Then I took my entry from here, okay. I took my entry from this fair value gap, yeah, maybe from this fair value gap, from this fair value gap until this rejection block, okay, until this rejection block, and market simply give me boom. Then after that I took another entry, okay, I took another entry over here, and this was really a precise price action on Monday. So yeah, I took my another entry from here, yes, from here, let me show. I took my entry from the propulsion block until my stop loss was above this candle, and I simply sorry guys, I simply put my target profit over here, like this is the last fair value gap, okay. So I simply put my target profit over here, and I took my partial to this last fair value gap, okay. I took my partial on to this last fair value gap. I saw there were no liquidities, and on the 15 minutes chart market traded something high time frame PDRA, also traded the, this is the last fair value gap, okay. Like this is the entry fair value gap, and this is the last fair value gap. So market, like this is the breakaway gap, okay. So market simply traded the entry fair value gap from the 1 minute chart, also traded something from the 15 minutes chart, I couldn't remember. So market, like, let me explain. This is the entry fair value gap, this is the entry fair value gap, okay. Sorry, yeah, this is the entry fair value gap. Like this is not a entry fair value gap, but as I took the entry from here, I am saying that this is the entry fair value gap. So this is the, like this is the order block, highest up close body close candle is my order block. But as I like this is my order block, okay, and I marked this as a propulsion block, as this candle has traded the order block over here. so also traded this fair value gap. Okay, then I can see a quick reaction, then I took my entry from this propulsion block. Okay, from here, and I nearly catched 32 handle run. So this was my one entry. Let me delete this. Then market again went higher, taken this high. Okay, taken this liquidity. Then over here market kept some liquidity, and like this is the all-time high. Okay, then market simply taken these buy side liquidities, and I took only one entry on the lunch hour, sorry, on the PM session. Like this was not the PM session, this was very next like it was after the lunch hour, very next after the lunch hour, and this was fully lunch hour, but I couldn't trade on the lunch hour. So over here market simply traded by this candle, and boom, again boom, boom, and until this. Okay, let me explain only my entries, which entries I took. Okay, then over here this is the Tuesday price action. Yes, this is on the London session. Okay, like end of the London session I took this entry. Normally I don't trade on the London session, but I took this entry because okay, I find my perfect setup, A plus setup, that's why I took my entry. On the 15 minutes chart, this is the 15 minutes fair value gap. Okay, market simply traded the higher time frame period, the 15 minutes fair value gap, and market over here all the buy side liquidities were taken, no more buy side. This, see, this high was taken by this. Okay, this high has been taken by this, although this is the shallow run, but I do, in the bearish market this is a nonsense. Okay, like this is completely a nonsense thinking that this is the buy side liquidity. No, as this is the bearish market. So over here market simply, I can look for that buy side liquidity if the 15 minutes candle could close above this gap. Okay, this is the higher time frame period, this is the 15 minutes gap. So market simply reacted the 50% of this 15 minutes fair value gap, also taken all the buy side liquidities. Then over here I can see market has taken some buy side liquidities from here. Then I got my market structure shift. There is the fair value gap by the two candles. This was a quick reaction, immediate reaction. Okay, I took my entry from here, my stop loss was above this high. Okay, and like this was, sorry, okay, then I took this entry and I put my first partial to this order block. Okay, this is kind of order block, so I put my sorry, not first partial, I took two trades, two entry over here. Let me show. Okay, over, it's not showing, why I don't know, but I took two trades over here. I really don't know why the market, like why it's not showing, but this was one entry and this was another entry. So over here I can see market react, like this was my target profit. Okay, so I got my whole profit by the three candles. Then I was watching that how this candle will react. Then I saw this candle was reacting and the market traded this order block. Okay, over here you can see I simply marked this as my order block, sorry. Okay, market simply traded the order block, one time traded the mean threshold, and my stop loss was above this order block. So then I simply, over here we can see like quick reaction, huge reaction. So I got like it's I put my target profit onto this sell side liquidity and I got my profit. After that I, over here I, this was normally after, like this is the 7 like 7 p.m. kills, sorry, 7 a.m. entry. Okay, sorry for my accent. Okay guys, as English is not my mother language, but also like it's new, I am new to YouTube, so this is really difficult for me, by the way. So this is the 7 a.m. entries. So over here I took another entry. I took this entry on my real account. Okay, so over here after these two trades I took this entry. How I took this entry? Okay, I took my entry, like this is the lowest down close body close candle. Over here market simply traded this gap. Okay, also traded this gap. This is my last fair value gap, like this is my breakaway gap, and this is my entry fair value gap. Market simply traded my entry fair value gap, also the 15 minutes, also traded the higher time frame PDRA 15 minutes last fair value gap. Sorry, this is a last fair value gap or not, I couldn't remember, but this is a 15 minutes fair value gap. So market simply traded the higher time frame PDRA, also the entry fair value gap. Then over here I can see this is the lowest down close body close candle, or we can consider this as the lowest down close body close candle, or something like this is my consecutive order block. So I took my entry from this order block. Okay, market like it tapped to my order block and also traded until this. Okay, we can consider this consecutive order block. Market traded the 50% of this order block or this order block. This is the consecutive order block and this is the like single normal order block. Okay, market simply traded the mean threshold and gave up higher run. Then I was watching that the last fair value gap was respected once. Okay, respected, and market simply, okay, the market simply I can show the market simply traded the order block again. Okay, this is the body. Okay, normally this is the order block, but I took my entry from here. Sometimes the market simply trade the weak and go higher. That's why I like I was a little bit fear. That's why it's normally called FOMO, but normally it's not a FOMO because I am not rushing into the trades. This is my, like, what to say, perfect setup. Okay, that's why I took my entry from this, and my stop loss was below this consecutive order block. Okay, so by the way, this was nearly about 14 handle stop loss. Then over here I can see the market simply reacted, went higher and traded something from here. Okay, then went lower, and then I can see that the market was building sell side liquidities before going higher. Then I saw market was coming here, trading this candle was traded by this. So this is my propulsion block, this candle. So over here I can see that the market was once the market has traded the order block, then after that I can see that the market has traded the propulsion block. Okay, then I saw the market was building some relatively equal lows. Okay, so normally the either if these sell side liquidities were not built, then I would trail my stop loss. Okay, but I didn't trail my stop loss because I saw that the market was simply building sell side liquidities. So after that the market took those sell side liquidities, then traded something like this order block. Okay, normally this is my order block, the lowest down close body close candle. Market traded the order block, and also it has traded the week. Okay, see how beautifully market traded it. Okay, let me delete this. So over here market simply trade and took all the sell side liquidities, 1 minute sell side liquidities. Then see what a nice run. Okay, what a nice run. And I always put my partial or like on the buy side liquidity. This was my buy side liquidity. I normally simply I took my first partial on this buy side liquidity over here, and I put my target profit on like TP on my last fair value gap, on this last fair value gap, because many time I saw that the market, this last fair value gap have the power to reverse the price. Okay, that's why I normally put my, as this is nearly about 44 handle, a huge profit. That's why I normally put my target profit on the last fair value gap. After that market simply traded something over here, then I didn't trade. Then it's time for what to say, this was maybe, yeah, this was the 9:30 open. After that I couldn't trade. Okay, I couldn't trade, I didn't trade. And this was Wednesday what to say, this was Wednesday price action. This was Wednesday, the worst price action on this whole week. So I had a loss. Okay, I had like a loss over here, and this is like I didn't took this entry. Okay, this was like hindsight. Okay, I didn't take this entry, but I took this entry when I saw the market has traded the high time frame PDR. Also market has taken all the sell side liquidities over here. Market has taken all the sell side liquidities. Can you guys see? Market has taken all the sell side liquidities. So after that, market traded a higher time frame PDRA. This is my higher time frame PDRA. Then I can see the market structure shift. Also taken some, like it's also a 22 YT model. Market has taken some liquidities over here. I took my entry from here, and until my first partial was here, and I took my target profit over here, and this was nearly about 124 handle. Okay, then over here, this was my last entry on Wednesday. Okay, so I mitigated my loss by this entry. Over here I saw that when the market, the 15 minutes body was closed below this gap. Okay, this is, I think this is the new day opening gap. Let me see. Okay, so this was probably a new week or new day opening gap. I saw the 15 minutes body has been closed below this gap. Okay, this gap. Then I saw a fair value gap, 1 minute fair value gap over here. I simply took my I simply took my sell from this fair value gap, also from this level, from the lower quartile of this gap, okay, and my, like, it was huge stop loss if I put it over here. So I simply put it over here because I have the, like, confidence that the market maximum can reach until this, the maximum it can trade until like the 50% of this, as these new week and new day opening gaps, the levels, okay, the levels are more, what to say, it's really important. Okay, market will trade every level. There is 4 levels. Okay, let me show. There is 4 levels on a new day or new week opening gap. Market will trade every 4 levels. So over here I simply put my stop loss over here, as this is not a logical stop loss, but I put it over here. Then I can see a order block. When I saw the market, simply the body has been closed below the order block, I trailed my stop loss. I trailed my stop loss above this order block, that the week can have the damage. Okay, then when I got my first partial, like I put my first partial below this low. Okay, then I simply trail my stop loss something over here, okay, above this height. Then I was looking, like, observing this gap, but before this gap traded, I got my target, like I got my TP. After that, market simply traded a higher time frame PDRO from here. Then this was Friday. Okay, no, this is not the Friday. Sorry, this was not the Thursday. Let me see the Thursday's price action. Okay, this is my Thursday's price action. Now, like, guys, carefully now, like, put your whole concentration on this video. I will be showing some gem, and I am explaining all the entries I took. Okay, there is no hindsight. Okay, the which entries were hindsight, like backtested entry. I didn't took the entry, but I marked it. I said on this video. Okay, so over here I saw that market simply traded the 15 minutes fair value gap, and over here this is Thursday. Yeah, this is Thursday. So over here I saw that market traded the 15 minutes fair value gap, and I took my entry from this 15 minutes fair value gap. This is not a logical entry. This is not a 22 YT model entry, nothing, because over here we can't see any, like, there is a fair value gap, but I took my entry because I saw that the market was reacting from this 15 minutes fair value gap. I have the sell side liquidity, that's why I took my entry. cause I was not taking my entry on the whole day Thursday. That's why I simply took my entry from here, but it didn't work. Normally got stopped out, but I put my first partial over here. Sorry, this is not my first partial. I simply put my first partial on this gap because I was watching this gap and this gap was like reacting. Okay, that's why I simply took my first partial over here, and I trailed my stop loss over here and I got stopped out over here. After that, over here, okay, when the 15 minutes body has been closed above this gap, the 15 minutes body, okay, like the 15 minutes candle body was closed above this gap, then I was confirmed that the market will go a little bit higher, then I can catch that run. Then I saw that the this fair value gap or something was traded. So this is the highest down close, like this is the lowest down close body close candle. So this, I consider this as my order block, but normally my order block is this. Okay, this is my perfect order block, but I took my entry. This entry should be from here. Okay, this is my fair value gap, like this. Let me show you. This is my fair value gap, but I simply took my entry because the stop loss would be huge. That's why I simply took my entry from here, and this is the order block. Okay, but normally I don't trade on this order block, but this is a order block as this is the lowest down close body close candle, and over here we can see the order was blocked by this whole candle. See, this is a huge candle, so this is our perfect order block. So I simply take my entry from this order block. My stop loss was below the weak 50% of this order block. Okay, if I put it below this low, it would be, what to say, huge. That's why I simply put my stop loss below the 50% of this week, also below the mean threshold. Then when the order block was traded, I can see there is a quick run. Okay, after that it was, let me see, 7, yeah, this was 716 to 742. Yeah, so this, like, I took my first partial over on this level. This was maybe a last fair value. Yeah, this is the last fair value gap. I simply took my first partial on this last fair value gap, then I trailed my stop loss, then I hold my trade until this fair value gap. After that, over here we can see that this is the 9:30 open on Thursday. This is the 9:30 open. Market taken all these buy side liquidities. Over here we can see market taken all these buy side liquidities, though it's a shallow run, but liquidity has been taken. After that we can see market fall. Okay, a huge fall. Then I simply took a entry from here. Like, why I took this entry, because in the sorry guys, on the 15 minutes chart, I saw that the 15 minutes candle closed below this level. Okay, then I was confirmed that, like, if this gap have the power to, like, reverse the price, okay, to take those extra, obvious buy side liquidities. Okay, but when I saw the 15 minutes body 15 minutes candle body has been closed below this gap and this gap, I was more confident that the market is going for some kind of liquidities. There were liquidities, sell side liquidities. Then I, like, take my entry from this fair value gap. Okay, put my stop loss above this, and I targeted until something, there was some kind of fair value gap or something. Yeah, there was some kind of fair value gap. Okay, 15 minutes fair value gap. So over here market simply come traded. Over here you can see this reaction. So there were something, like, let me show you guys. There were some 15 minutes something, or like there were something, I couldn't remember, by the way. Oh no, sorry guys. Okay, so over here this was a falling knife, but it's luckily I can I could catch this run. Okay, so after that I saw that market simply traded a higher time frame PDRA from here and give a huge run. Then I simply take, like, on Thursday the market was well precised. Okay, then on like when the market traded a 15 minutes fair value gap from here, yes, I can remember the market traded some 15 minutes fair value gap. Then I took a short scalp. Okay, I took a small entry with lower risk. I simply take my entry from here, and like it was huge stop loss, that's why it was maybe 1 micro contract. Okay, so I simply put my target profit until this fair value gap. Okay, then market break this fair value gap. Then over here I can see there like market created a 15 minutes fair value gap over here. Okay, let me show you. But by the way, I showed everything, like first of all I showed the 15 minutes recap. Okay, now I am showing the 1 minute recap. So this was a 15 minutes fair value gap. Market simply reacted from this fair value gap and was consolidating over here, accumulating. So over here I can see there is a last fair value gap. Over here we can see this is the last fair value gap. Market traded the last fair value gap, fall. Okay, fall until here. So why here I don't know. Then market again went higher. So this is the highest up close, like these two are, like these both candle are green. Okay, so they are my highest up close body close candle, but this is my highest up close body close candle, but I'm not considering this as my order block, because see, this is a Judas swing. Okay, like this is like it's, I normally don't consider this as my order block, because see, this is like, what to say, a candle without like with bones. Okay, no, like no calcium on it. By the way, it's a unhealthy candle, sorry. So I simply took my entry from here, like this was my order block, and I can see there was a fair value gap. So I simply took my entry from this fair value gap, and I put my stop loss above this high. Okay, above this high. Then I marked my mean threshold. So over here, see how beautifully, okay, how beautifully market reacted from the mean threshold. No 1 minute body was closed above the mean threshold. So after that, market simply also traded the last fair value gap, building some liquidities and taken all the liquidities from here. Then see, boom. Okay, boom, until this last fair value gap. See why I took my target profit, like why I put my TP on the last fair value gap. So this is like, there is no last fair value gap, this is the only last fair value gap. Okay, so how beautifully market reacted to this last fair value gap, and see how beautifully, wait, let me show how beautifully market reacted to this last fair value gap. Okay, so after that also, when market closed below on this whole run, when market closed below, like this body was closed below this candle low, then this is what to say, I forget the name. Okay, so this is like what it was, something like institutional something was, like the name was something like that. So if any body close above this 50%, like no body, if nothing is here, if, okay, like it's always no body should close above the 50% of this, like of this candle. So I was watching the price and saw that, see how beautifully the market was reacting from this 50% of this candle. So that time I simply trailed my stop loss over here, then I got my boom. So this was the last entry on Thursday. Yeah, after that, this is my Friday price action. These were my sell side liquidity. This is my high-end side. Okay, high-end side. So I didn't took this entry. This I was just simply, I put this, I was in front of my monitor, but in front of my chart, but I didn't took this entry because see the stop loss. it's 48 handle, yeah, 45 handle, so I didn't took this entry. And over here, see, market simply taken all the sell side liquidities. This was the manipulation, this was the whole day accumulation, Friday accumulation, manipulation, then distribution, taken all this buy side liquidity. These are my buy side liquidity. Okay, so these are my buy side liquidity. So market taken all the buy side liquidity. See how beautiful price action, but it on the 9th, like I don't like to trade on the 9:30, okay, because it's a little bit volatile. Okay, it's highly volatile when the 9:30 open. So that's why I didn't took this entry. After that I took this entry. I explained it on my previous video. Okay, and I took only this entry. So over here you can see this was the 15 minutes rejection block. Market reached here, reaction from the 15 minutes rejection block, and over here my target profit, see, 129 handles, and it has taken the buy side liquidity because there is no sell side liquidity. See, all the sell side liquidities were taken, so why should market go lower? Also the extreme sell side liquidity, the daily, weekly sell side liquidities were also taken by today, by the Friday. So market shouldn't go lower. Okay, market don't have any undone, like market don't have any jobs for that the market will go sell. Okay, the market will go down. So that was today's video. Hope you guys learned a lot from this video. I know this video is huge, like it's I think 1.5 an hour. I didn't know. Let me see. By the way, it's 56 minutes. Okay, so this was today's video. So it was overall the weekly recap. So I hope you guys learned a lot from this video, and again sorry for my accent, and sorry for my like I'm really new on this YouTube. Like I'm really talking like I'm really making videos on YouTube at first. This is my first time, so hope you guys will consider this. And that's what today's video was, and hope you guys, like I know that you guys should be profitable on this week. This week was, what to say, totally a best week. Like day by day the price action is becoming much more accurate. Okay, so that's what. So give it a thumbs up and subscribe to our channel. Please like the video and learn to study like this. Okay, on every weekends, just don't, okay, just don't, what to say, don't enjoy your profits on the weekend. Okay, yeah, you should enjoy your profits, but you should also give, like this is like this chart is, this nasdaq is like your girlfriend. Okay, so in a day you should, one time you should meet her, as like this is a weekend, I know, but you should, okay, you should have love for this trading, for this chart, otherwise you can't be a profitable trader. That's what. So hope you guys enjoyed this video. See you soon on Monday.